In the last decade, Russia has averaged a staggering production of 10 million barrels of oil a day. The country holds the largest fuel reserves in the world and has a 12 to 13% share in global oil exports. But despite its arch-dominant position, financially Russia is going through its worst period since the 2008 financial crisis. Since mid-2014, global oil supply has exceeded demand due to the surprisingly resilient fracking boom in the US and slower than expected demand in China. For much of that time, OPEC did nothing, and as a result, the price of oil plummeted. At one point, both Brent and WTI were below $30 a barrel. The collapse in oil prices coincided with the ruble crisis and the international economic sanctions following Russia's annexation of Crimea and military intervention in Ukraine. Russia has now been in recession for nearly 18 months, and more than any other, the Russian government needs the price of oil to go up and give a boost to a very slow economic recovery. This clearly explains Russia's decision to follow OPEC in its ambition to cut production in order to boost oil prices. In early December 2016, Russia announced plans to use its November oil production as its baseline when it cuts its output by up to 300,000 barrels of oil per day. That month, its daily oil production rose to an average of 11.21 million barrels per day, Russia's highest since the Soviet era and 500,000 barrels per day higher than in August 2016.